Good morning. Let's talk about what's going on in the market today. So we've had some news that's made the market go back and forth, and let's talk about how we look at the market. And I'm going to show you one of my favorite tools that I like to use. And the purpose of this is to get you into the mindset of being a long-term investor, like think 20 plus years. I actually teach my mastermind members to be lifetime investors because a lot of people typically say, oh, I'm going to start being super conservative when I'm around 65 or 68. And you miss this huge curve where the market is going to make your money grow and you're going to miss out on millions of dollars. So let's talk about what patterns the market is showing us. I'm going to share my screen and I'm going to show you a tool that I love to use. And this is a free tool. This is called Google Finance. So I'm going to be looking over here. I've got this on my screen. The Dow Jones is currently down 212 points. And let's talk about why. And let's talk about what indicators I look for what the market's going to be doing and just have an overall perspective. So you can go to googlefinance.com and this is a free tool. And I encourage you to get to know this and to just use this. So when I'm talking about the overall market, I'm talking about the Dow Jones. I feel like the Dow Jones has a really nice, I feel like it's a nice indicator to show what's happening with the market, like what's going on, kind of has its like pulse on like the economy and what's going on. So right now, this is pretty cool because it shows 1 day, 5 days, 1 month, 6 months, all the way up to maximum. So if we just look at 1 day, the news that's coming out today is that there are some worries about what's happening in the Middle East with oil. And then there's also some concerns about job reports. So if job reports come out soft, then people worry about the economy slowing down. And in the Middle East, the concern is if there's all these arguments or tension or trouble in the Middle East, then oil prices, like they'll stop producing as much oil, or maybe they'll stockpile it and they won't ship that to the US and other countries. So that would raise oil prices. And then the stock market tends to respond to short-term news. So the stock market today is responding to short-term news. I want to talk about cycles in the market. This is really important. So if we look at a 5 day, it's going to look different. Now, the market has gone down in this case over the last 5 days. Now, what I teach in my mastermind is that you can make money when the market goes up or goes down. So actually, my mastermind members cheer when the market goes down because we're going to make more money in a shorter period of time. We're going to make money whether the market goes up or down. So I just need you to put that into your head. Let's look at a month. The stock market's gone up over a month, and likely you see the stock market's going up and down. It's just reacting to news. Sometimes the stock market can be priced for future events, like when COVID, for example. So if I go to, let's try max 5-year and maximum. So we have, this would be right here. This would be the downturn for '08. So what we call the Great Recession, or in Australia, they call it the Great Financial Crisis. So this is when the stock market went down overall by 56%. And then we have the market going up for pretty much 14 straight years, which is amazing. And then it goes down right here for COVID. So let's talk about this. They're pricing in the market for as if COVID is going to last forever. Now, it was a 3-month drop. Then we have the recession of 2022 that's right here. We're actually sitting right here where this green dot is. So we're at an all-time high. And I want you to think about the market working in cycles. There's going to be a major change every 5 to 10 years. There's going to be a major correction. There's going to be a minor change every 3 to 5 years. So the stock market is just doing its job. Sometimes people get wrapped up in what it's doing on a daily basis. So if I'm looking at this, you see a lot of green, right? This is rocking it. This is amazing. This is how you make money as long as you're allocated correctly or invested in the right things. And that's what I mean when I say that. Some people may be only getting, when I work with people and they initially come on, they're actually getting only about a 3 to 6%, even if the overall market is going up by 30%. And that's the average return right now with the people who are in the mastermind are getting an average of 30%, anywhere from 26 to 44%, but the average is around 30 or 32%. If you're getting less than that, then your investments are probably not allocated correctly. And so what it does is it kind of robs you of that compounding power that we want. Like every percentage higher that you can get as a return, that's going to compound. That's going to affect your bottom line. So that could mean millions to you at the end. As you're investing, we want that to compound as quickly as we can. So if it's compounding at a 3 to 6%, that's really not above inflation. So technically your money is not making money. And then on top of that, we have fees. So if you're hiring a financial planner and they're only getting you a 3 to 6%, and then you're paying fees on top of that, you probably are flat for growth. So something to keep in mind. But looking at this graph, this is huge as far as growth. So this is maximum, and you can play on with this yourself, but maximum, look at, we're sitting at an all-time high. Now, some people may say, you know what, we're probably looking at a haircut. I don't have a crystal ball with working batteries. And if you do, I want you to DM me right now and let's talk. But it doesn't matter what the stock market's going to do, because you're going to make money whether the market goes up or down if you know what you're doing. So I actually kind of cheer when the market has a correction. We don't want it to go up forever without correcting, because then it results in these giant bubbles. What we want to have happen is the stock market goes up and down, because that's its job. It reacts to short-term and long-term stories or news or things that are going really well. As inflation goes down, the market's going to go up. So I want you to look at this as like something that's a cycle. It's just something that kind of repeats itself. And as you learn the cycles, then you can learn to make money whether the market goes up or goes down. This is huge to have for mindset. So if the market's going down, I don't mind. I'm actually really excited because I can make a lot of money in a short period of time. So I'm going to make money as the market goes up, because the price of my shares, the value of my shares is going up. If the market goes down, I'm going to make more money in a shorter period of time. So either way, we're going to be building wealth. So looking at the market today, if we go back to one day, we're down 189 points. We'll see what this goes. It actually was down further this morning. We'll see how the market reacts to the news. It's kind of just waiting. It's waiting for more information. So the market actually is pretty astute in that it's always reacting to the information that's coming. So if you can say, hey, I think this is a short-term thing, or this may be more of a longer-term problem, like that we have some fundamentals that are kind of off, then that's when you can make a judgment on whether the market, you think it's going to be cycling up or down. To be honest, I'm not obsessed with the market. I don't look at it every single day. I usually know about where it's at. And if it has a huge drop or a huge gain, then I'm aware of that. But I'm going to make money no matter what the market is doing, because I want to take my earned income and put that into the market and invest it so that eventually that money is going to be working for you or instead of you. So I had a mastermind member that shared on we have Thursday meetings. And on Thursday, she said, I just have a win to share. I'm making as much in my investment account as I am working full time. So that's the goal. We want to get to the point where you're cloning yourself and you're sending your money off to work for you and then eventually in your place. So just knowing that the market cycles and this is what's going on, why it's reacting the way it is on a specific day or even for a week, because if we go 5 days, which is a week because the market's closed on the weekends. So the market has gone down this week. And why? Because it's reacting to the local news. So what's going on impacts the market. But I want you to kind of step back a little bit and get a longer view on what's happening. So if you're listening to the news every single night saying, oh, the market's gone down for a whole week, then let's look at perspective and just kind of back up a little bit and say, yeah, but the market's at an all-time high. So make sure you're getting all of the growth that you can. Go in and check your accounts. Are you getting a 3 to 6%? You should be getting at least a 30% right now. If not, then you need to figure out how to correctly allocate your stocks, and then you're going to get a better growth over time. So the whole point is to make your money work for you.